Hi, welcome to our group's presentation of a company analysis for Goldman Sachs, huge investment banking firm, one of the biggest in the world, and it's a leader in this industry. My name is Shayan Bhattacharya. We have Sandy, Hao, and Yesenia in our group as well. I really hope I'm pronouncing those correctly because I've never met them in person. In order to get an idea of how we broke this project down, I will be starting us off as you can tell, and how it's going to take care of the vision, the mission, and the SWOT analysis, the strengths, weaknesses, uh, opportunities, and threats that are associated with this. I almost forgot for a second there. Strategy and competitive analysis will be taken care of by Yesenia. Concepts that we're going to tie back to our education for this class and what we've learned is going to be taken care of by Sandy, and I'm going to close it off for the conclusion, and let's see where that takes us. Okay, so let's talk a little bit about the company and how it was, the starting and just how it's come to be that it's a huge company. It was established many years ago in 1869. It's been around for a long time. It was founded by Marcus Goldman, who actually lived in Bavaria for a long time in Eastern Europe, and he was a professor, teacher, and he decided to move to the States and do the same for a while. He was teaching and stuff, but he decided to get into the commercial paper industry. He would facilitate deals between either a bank or some other investor and a company who needed money, and they would get them these things called commercial papers, which were essentially promissory notes that would help the company get short-term capital. And it's used by many companies around the world, Walmart and many others. And in order to make money in this endeavor, he would take a little cut of the profit, and just that adds up over time, especially if you're doing big deals and stuff. And that's essentially what an investment bank does, especially if it's in an intermediary capacity, like a lot of investment bankings are. They're called underwriters. So we were asked to come up with a story, an interesting story that would give us a little background on how the name Goldman Sachs came about. But very similar to a lot of other companies, sometimes the name doesn't have a very interesting backstory. In this case, it's not very interesting. Goldman is the name of the founder, and around less than 20 years after the company was founded, his daughter was married to a man named Samuel Sachs, who came into the company. And once they started working together, they changed the name to Goldman Sachs and Company. So that's pretty much it. Sometimes things like that happen. I mean, if you think about some of those law firms that are just something and something, it's just their names. It's simple as that. But yeah, so the way the history of Goldman has come about is that they started with the commercial paper. That was their main venture, main product line. And once the name changed, Samuel Sachs joined the company and became Goldman Sachs. They started venturing out into other things and started building the foundation for the company that they are today. Of course, not long after he joined the company, almost 40 years later, the Great Depression hit, and it ravaged many companies that obviously aren't around today. But Goldman Sachs was able to endure and able to come out of that and learn a lot of things, I'm sure. And they've been big ever since for the last almost 100 years now. There's a lot of things that Goldman Sachs, like any other investment bank, deals with, especially in the finance world. There are so many complex and vast amount of financial instruments. Goldman Sachs, like some of the others, deals with stocks, deals with bonds, I'm sure they deal with loans and stuff as well. They make it into financial products like we saw 8 years ago. And one of the biggest things that they deal with, which is something that is a big part of the finance world today, is derivatives. And derivatives are very complex, and they're getting more complex by the day. But they allow people to not only bet and speculate, as the term is called in the finance world, based on their predictions, but they can also hedge or insure against price risk or interest rate risk or whatever other risk that they might have in their company. And so derivatives help deal with that a little bit. And since they're so complicated and can be, and there are many rules behind it, the investment banks have figured out very sneaky ways to manipulate it and figure out ways where they can make a lot of money. And derivatives is where the money's at in the finance world. We're gonna look at these charts a little bit. Look at the right one, the very blue one, is the global market share of revenue. Meaning, in terms of revenue, these are the companies that have some of the biggest piece of it based on market share. And JP Morgan leads that because JP Morgan is a very successful company as well, and they've been able to combine with Chase recently, and that was a big thing for them. JP Morgan they represent 8% of that market share, but Goldman Sachs is just right on their tail with 6.7%, and that is a big deal. You know, especially in recent years, we've seen the dip of investment banking revenues and people reporting companies reporting losses and stuff, and to be able to keep that healthy market share is very important for companies, and it's a good indication to investors and shareholders. On the left side, we see a little chart here. This, like we were talking about earlier, derivatives. This is a list of the best companies within North America that deal in particular derivatives. There's a list of 6 here, and that's 5. I'm sorry. And Goldman Sachs is rated amongst the best credit derivatives provider. Credit derivatives is a type of derivative, and the most interesting thing about that, like we were talking about before, is that there's so many types. You can basically go down a rabbit hole when it comes to derivatives. There's derivatives on top of derivatives, and it becomes too complicated after a while. But if you can figure it out, you can make a good buck on that. And that's it for me on this end for now. You'll see me again, unfortunately, at the end of this presentation. Right now, I guess we're gonna have Hao take it away.
Hello, my name is Hao Chang Chi. I'm here to talk about the company Goldman Sachs, their vision statement, mission statement, and SWOT analysis. Their vision statement is helping Americans plan for the future. Goldman Sachs is trying to create a better future for Americans by getting involved in places where financial planning is needed to carry out larger and more impactful movements. In Washington, D.C., they helped funded the Clear River Project, which brought cleaner water to the entire city. In New Orleans, they helped with revitalization after the damages dealt by Hurricane Katrina. They helped rebuild communities and homes in the city. In Cincinnati, they worked with an insurance company to bring forth an innovative retirement plan, which benefited millions of Americans in the middle class. In Santa Clara, they helped their economic growth by helping them finance a football stadium. The football stadium made the city more unique in California, and it promoted economic growth, created jobs, and there's a series of good stuff that came with it. They worked with Mobileye. It's a technology company. They created a chip for cars, which will definitely make the road safer, because the chip will monitor road conditions by itself, brake by itself, change headlights, well, change the density of headlights, not change physical headlights, because you can't do that. Also, they worked with MRC Global to create more jobs in the energy field. Mission statements are all about the future and what they intend to do. And Goldman Sachs, their vision statement is helping people plan for the future, which really fits the theme. Mission statement is all about the present, what they're doing right now and who they are. And Goldman Sachs' mission statement is Goldman Sachs commits people, capital, and ideas to help out clients, shareholders, and the communities we serve to grow. There are 5 factors in the textbook that identifies an ideal mission statement. But The first one being, what is the company trying to sell? In this case, they're selling their services as financial planners. And second one, who are the potential buyers? Based on the mission statement, the potential buyers are anyone who wants to grow financially, economically, mentally. And what market is the company serving? The financial market, because that's already there, painted by the company over the last 100 years. How is it pleasing its customers? The customers are happy they're getting their returns on investment, and people should be happy that they have more money than they did before. If not, then that's not really Goldman Sachs' problem. Because they're pleasing the customers by bringing more money to them, which should be a good thing. And does the company have its own identity? Well, the company is well known all over the world as financial advisors, and it's also a Fortune 500 company. That should be identity enough as itself. On the Goldman Sachs website, there are a few add-ons to the mission statement as to what they do. I think it's advise, innovate, manage, financial planning, and a few other ones. For SWOT analysis for Goldman Sachs, their strength is in their brand name and their international outreach. It is a multinational company, and their brand name is well known throughout the world. Their weakness is their low diversification of services, and they're working on that because on their website they're also they added management and innovation to what they do. Opportunities for Goldman Sachs is international expansion. They could potentially go to a lot more different countries and do the same thing they do in America, helping people grow. The major threat for Goldman Sachs is governmental intervention, because for a company like Goldman Sachs, which provides financial advice and help people finance for their goals and dreams, a few changes in the rule of law, a few regulations added could potentially destroy the entire company. But to summarize the SWOT analysis, they can use their strengths and opportunities to overcome their weaknesses and threats. Because the threat of governmental intervention cannot happen in every single nation on the planet. And while their strength is their international outreach, they are spread throughout many countries. And their opportunities of international expansion also fits in on that theme. And there's my part of my presentation.
Greetings, class. Today I will be discussing Goldman Sachs' various strategies and compare its strategies to one of its major competitors. Here in the first slide, I decided to add one of Goldman Sachs' slogan, and it reads, "Our clients' interests always come first." I think it was very interesting, and I decided to add this for the audience. Let's go ahead and jump into our first slide. I decided to do a SWOT analysis because just honestly, I didn't know about the company, and others may be wondering who or what is Goldman Sachs. Well, it's an investment banking company, and I wanted to do its strengths, weaknesses, opportunities, and threats. So one of its opportunities is that it has a strong brand name and good financial position. One of its weaknesses is that fluctuating markets can create variable revenues. An opportunity I see in the company is if it was to move into international markets, and it will be able to diversify portfolios for its customers. And a major threat would be a financial crisis, just the one like it took place in 2008 when a whole bunch of companies went bankrupt and out of business. Let's go ahead and move into the next slide. In here, I will be talking about why Goldman Sachs likes to focus so much on technology. Well, here, technology enhances the overall experience and quality for its customers. So by this, it processes and executes transactions more quickly and seamlessly. It also helps communicate faster and efficiently. Another thing it does, it helps operate efficient as a firm overall. And by this, I mean that a good example I see, and it helped me understood more, was that they rely more on open source and cloud strategies. This has helped reduce vendor expenses on the workplace application infrastructure. Next, it helps meet regulatory requirements. Since we are doing our presentation in Goldman Sachs and it's an investment bank, their regulatory requirements would, one of them would be Dodd-Frank implementation. And a good example would be if Goldman Sachs was to hire staff to build and adapt software, and then once they have embedded technology solutions, they can reduce and redirect resources to support other areas of the firm. And lastly, technology developed in Goldman Sachs can be viewed as a standalone product. By this, they have platforms they use, and some of them are Tradeweb, Direct Edge, and Market, which they use to track records. These are platforms they have developed and they've monetized them. And today, platforms such as Symphony and Market help clients communicate, manage risk, and analyze their investments. Next, let's go ahead and talk about the strategy analysis of Goldman Sachs. The first one is that their strategy is predicted on structural cyclical factors. And here, structural is basically just new regulation. And since there are a franchise, they address this change and they like to adjust to the new regulations if they do emerge. They look to deliver to their shareholders over the long term, and they want to remain flexible to capture growth opportunities. They also search to grow its three principal business lines, which is investment banking, trading and principal investments, asset management, and security services. So investment banking is basically just merger and acquisitions in regards to that. The second one is trading and principal investments, and that's just basically bank loans and commodities. And the last one, asset management, is mutual funds, and they have more, but just to keep this video short, those are just some examples. They also search to expand high value added businesses, and here they're looking to grow and have higher returns. They also want to increase stability of earnings, and this is just to balance their earnings within the long term. Also pursue international opportunities. Again, this is if they want to expand, and leveraging the franchise. A good example I found is that if investment bankers in Goldman Sachs refer clients who are selling their businesses to other people working in Goldman Sachs. Next, let's discuss about the different business models. And here I'm comparing Goldman Sachs with Morgan Stanley. Morgan Stanley is mostly referred as an investment bank. They're more conservative and cautious, while Goldman Sachs focuses in lending private equity and hedge funds. Morgan Stanley separates business units into three branches, and theirs are institutional securities, wealth management, and investment management, while Goldman Sachs is investment banking, trading and principal investments, and asset management and security services. Morgan Stanley stresses more on wealth management rather than derivatives, while Goldman Sachs depends more on trading revenues. Morgan Stanley has a lower beta revenue model, while Goldman Sachs emphasis on fixed income, currency, and commodity trading. This model is sensitive to two variables, and those two variables are lower interest rates and broader market volatility. And our last slide is just a graph. It's a graph with statistics, and this one compares global market share of revenue of the largest global investment banks, and this is recently, months ago, and it dates July 4th, 2016. And on that date, the revenue for Goldman Sachs constituted of 6.7% of the global investment banking revenue. I hope you enjoyed this presentation, and I will see you on the next video. Thank you. Hello, everyone. I will be talking about the concepts that we have found relevant to our recent readings that Goldman Sachs has done in order for them to become one of the companies of the Fortune 500. So, based on our research, we've seen that they have win-win strategies whenever they do have a strategic alliance or a partnership, meaning that Goldman Sachs is not the only one benefiting from the arrangement that they have agreed on. Also, strong partnerships actually lead to successful turnovers. So at the end of the year, it's not only Goldman Sachs making higher profits, but also the other company as well. So Commonwealth Bank of Australia is one of the partnerships that I researched that they have offered, well, Goldman Sachs has offered to the clients in Australia and New Zealand to use the in-house tools for the trading systems. So they are opening up their services to the Australian and New Zealand clients internationally. That way they can bring in new clientele with large funds and offer over 3,100 stocks to become available to them. And the new thing is, obviously, instead of just staying here in America or nearby countries, you can offer products and services internationally, which will open and attract different markets and bring in more portfolios that will become successful with the relationships that are built. So the joint venture with China is a major thing for Goldman Sachs. In 2004, they did a joint venture with them. And as we all know, China is one of the leading countries that affects our economy. So anything that happens in China will obviously take an effect on us, or anything in the trading system that China has a part in and that affects us. So partnering with them was very influential to Goldman Sachs. They partnered with Beijing Gaohao Securities Company Limited, and it was the first time that Goldman Sachs in 2004 could offer services to domestic mainland China clients. So that was a very big accomplishment for Goldman Sachs that made them become, again, international. So, as we all know, corporate social responsibility is a highly valued concept in our era nowadays. So, ISO certifications and OHSAS those are one of the highest certifications that a company can actually receive for them to be very involved with their environment and how are their standards. So Goldman Sachs has partnered with Blue Sword, who has a lot of expertise that Goldman Sachs does not have in regards to the greenhouse gas emission reduction projects, and are actually noted to be best-in-class risk management. So they will be offering real climate change solutions to clients when they're actually trading. So that will open up another portfolio that Goldman Sachs is not very strong in. So that way they can cover overall all of the aspects into the trading world, where a lot of other competitors don't offer that to their investors. So they have received ISO 14001 and OHSAS 1801, which is one of the highest ones. So being partnered with Blue Swords, it's a very strong strategic alliance that Goldman Sachs has done in order for them to become one of the Fortune 500 companies. So how is Goldman Sachs holding a strong market position? Well, they have done some changes in their management because of, once you replace people with new management, it's due to their leadership, because they can guide all of the employees and everyone else to come all together, unite, and make and reach all the goals that Goldman Sachs actually has. So once there is changes in the management, they evidently always do a SWOT analysis, which is the strengths, weaknesses, opportunities, and threats. So after they do that type of evaluation, they actually go over what are the changes that they need to do, what is working currently right now, and where do they see themselves within the next 2-3 years or even longer. But what we need to do that is to see what changes they have to do and what kind of replacements they need to get. So in the fourth quarter in 2015, it was one of the lowest profits for Goldman Sachs. So change in management is definitely a start that they saw for them to actually have a stronger market position. But Goldman Sachs, as we've seen the strategic alliances and partnerships, they have offered a lot of in-house tools. So Goldman Sachs is actually looking to have open accessibility to all of their clients. Now, a lot of competitors are very skeptical about having them use all of their tools that they're using for the trading. So it's basically, how are you going to release your secret sauce for your clients? But, maybe what if that's too much accessibility to them? So is that a high risk, or is that leading an evolution? So Goldman Sachs is actually taking that risk, and it is offering that to their clients. And as stated by one of the competitors, is that Wall Street firms have to reinvent themselves, or else they're going to lose their investors. So that's one of the competitive strategies that they're doing to have a strong market position with their clients, and that way they can actually have more people come in to use their products and their services than going to another company. So I believe all of these concepts have been very relevant to how Goldman Sachs has become one of the Fortune 500 companies.
Welcome back to me. Yeah, so we're almost at the end. Don't worry. I'm sure my colleagues were able to enlighten you on some of the very cool and interesting sides of this company that maybe you've never heard of. And we were able to go through some of the most important points. And I just want to recap them for you. How took some time to talk about the Goldman Sachs vision, their mission, and their analysis, their personal evaluations of their strengths, their weaknesses, their opportunities, and their threats. And in order for a company to survive, they need to always be evaluating, always be looking inwards, and always be trying to be better in order to survive, in order to grow as a company. And that's something that must be done. It's very important for every company, because vision may or may not change, but it will definitely look a little different depending on the year, depending on where you want to go next, because the future is always very uncertain, especially in the finance and the business world. And so having a vision is very important. Just to know what the future, what you want the future to look like. And once you have that kind of forward-thinking idea, you can adjust your current efforts to match that. And when we talk about mission as well, we have to have a certain goal that we want to achieve, right? We have to plan for future events, and it's important to have that at various levels and at various times in your process, in your journey towards success in a company. And the SWOT analysis is very, very important, because it not only allows you to be happy and analyze the good parts of the company with your strengths and your opportunities, but you also look at some of the stuff that may hurt you in the future, or some of the stuff that you may need to work on with the weaknesses and the threats. And a company and even a human being that can do that on a fairly regular basis can have much more success than someone who isn't willing to take someone or a company that isn't willing to take constructive criticism. And that's very important in business. As Yesenia talked about, we talked about Goldman Sachs strategies. Various strategies may or may not have worked, and their competitive analysis. When it comes to a company, there's they have various strategies for achieving various goals, because once you get your vision and your mission out of the mission, and you analyze your strengths, your weaknesses, your opportunities, your threats, you got to figure out a way to achieve what you want to achieve. You got to know. It's basically like a blueprint. Like, you want to have a map so you know how to build the house, but sometimes those maps aren't exactly what you wanted. You start building the house and you're like, this isn't what I want the house. So you got to always be changing. You got to always be adapting based on the market, based on maybe changing visions, changing missions. And so the strategy is not set in stone. It's a broad outline, and it's good to follow it to a certain extent. But if it's not working, if you're not achieving what you want to achieve, if you're not getting the desired result, you might have to adjust that strategy, maybe change it completely, maybe just completely throw it out the window and get a new one. And so it's very important for a company to be able to have not have the pride get in the way, have the ego, and just look for what's best for them and for their shareholders, and to be able to adjust to that, and that will give them a lot of success. As Sandy was talking about, there's various concepts that we learn about in our class in this undergraduate program that apply to this huge company that's been around for hundreds of years. And it's highly interesting, because you would think that a company that's at the top of the mountain like this for so many years, you wouldn't think they would need to follow these basic principles, but they are basic principles for a reason. They work, and that's all that matters. And they've been able to use some of these and apply them in their lives, in their business strategy, in their business execution, and they've been able to stay on top for a long time because of that. And building strategic alliances, very important. Just because your company is strong doesn't mean that it can't be better with the help of others. Corporate social responsibility, it's the be all end all for a company. The end result that you want is, more money for more money in the pockets of your shareholders. Maximizing shareholder wealth is basically the principles of business. But having a little bit of social awareness and working hard for the environment around you is just being good as a person. And companies aren't technically people, but it's always good to have that corporate social responsibility, and that's very important. And Goldman Sachs has some deals with it. Also, essentially, what we could talk about, various things, and it wouldn't change a lot of people's minds, because Goldman Sachs is a household name. It's been around for much before a lot of us are around anymore. The people from that generation don't exist anymore. They've been around for that long. They've been around for generations, and they'll be around for generations more, because they figured it out. They figured out a way to stay relevant, to stay competitively advantaged, and their future is fairly solid. I mean, unless something drastic happens in the next 30, 40 years where finance just becomes obsolete, which I've heard various people tell me stuff like that. I don't know, maybe. They'll be good for a while. They're at the top of their mountain. They're industry leaders, and because they've been able to diversify and deal with things other than just like back in the 1860s commercial paper, they don't deal with that anymore. They deal with a lot more, and they've been able to stay competitive. They've been able to enhance their portfolios. They've been able to add stuff to what they offer, to their product lines, and I think it's very important as a company, regardless of who it is, to do that, to grow. And Goldman Sachs has been able to do that. And in the end, it doesn't matter. Goldman Sachs can outlast a lot of other people, and they will. And they've survived the Great Depression, the Great Recession, and everything in between. So, what do we know? Anyways, thank you for listening to our presentation. We hope you learned something, and that's about it.